Hey, everyone, welcome to my YouTube channel. Today we are going to be discussing investing in sustainable and ethical funds. Investing in sustainable and ethical funds has become increasingly popular over the last few years. As people become more aware of the impact that their investments can have on the environment and society, many are choosing to align their profits with their principles. Investing in sustainable and ethical funds means making investments in companies that prioritize social and environmental concerns. These companies are working to create a better world, without sacrificing financial returns. In this video, we will explore the benefits of investing in sustainable and ethical funds, discuss some of the key considerations that investors should keep in mind, and highlight some of the top sustainable and ethical funds available on the market today. Introduction: the rise of sustainable and ethical investing. In recent years, there has been a remarkable shift in the investment landscape as more individuals and organizations recognize the importance of aligning their financial goals with their values. This has given rise to the growing popularity of sustainable and ethical investing. Gone are the days when investors solely focused on maximizing profits without considering the social and environmental impacts of their investments. Today, people are becoming increasingly aware of the consequences of their financial decisions and are actively seeking investment opportunities that not only generate returns but also contribute to a better world. Sustainable and ethical investing, also known as socially responsible investing, SRI, or impact investing, involves directing capital towards companies and projects that prioritize environmental sustainability, social justice, and ethical business practices. It emphasizes the integration of environmental, social, and governance (ESG) criteria into the investment decision-making process. This shift towards sustainability and ethics in investing can be attributed to several factors. First and foremost, the heightened awareness of pressing global issues such as climate change, income inequality, human rights violations, and corporate misconduct has prompted investors to reevaluate the impact of their portfolios. They now recognize the power of their investments to drive positive change and address these challenges. Consumers are increasingly demanding transparency and accountability from businesses, and their purchasing decisions are often influenced by a company's commitment to sustainability and ethical practices. As a result, companies that prioritize ESG factors are not only seen as more responsible and trustworthy but also have a competitive advantage in attracting customers and talent. In response to this growing demand, financial institutions and asset managers have developed a wide range of sustainable and ethical investment options. These funds provide investors with the opportunity to allocate their capital towards industries and sectors that align with their values, whether it's renewable energy, clean technology, fair trade, gender equality, or community development. Investing in sustainable and ethical funds not only offers the potential for financial returns but also empowers individuals to make a positive impact on society and the planet. It allows investors to support companies that are actively working towards a more sustainable future, contribute to the transition to a low-carbon economy, promote social justice, and foster responsible business practices. In this video, we will explore the various aspects of sustainable and ethical investing, including the different strategies and approaches, the benefits and challenges, and how individuals and organizations can get started on their journey towards aligning profits with principles. Understanding sustainable and ethical funds. Understanding sustainable and ethical funds is essential for investors who aim to align their profits with their principles. These funds, also known as socially responsible funds or ESG, environmental, social, and governance funds, prioritize investing in companies that demonstrate strong environmental, social, and governance practices. When investing in sustainable and ethical funds, it's important to understand the different approaches they can take. Some funds may focus on excluding certain industries or companies involved in activities like tobacco, weapons, or fossil fuels. These exclusions ensure that your investment avoids supporting practices that go against your values. Other funds may take a positive screening approach by actively seeking out companies that proactively contribute to sustainable solutions, such as renewable energy, clean technology, or social impact initiatives. By investing in these companies, you can support positive change while potentially benefiting from their financial success. Sustainable and ethical funds often incorporate a robust ESG analysis into their investment decision-making process. This analysis assesses companies based on various criteria, such as their energy efficiency, labor practices, diversity and inclusion, and board governance. By evaluating these factors, investors can gain a deeper understanding of a company's commitment to sustainability and ethical business practices. It's important to note that sustainable and ethical funds can vary in their specific investment strategies and criteria. Therefore, it's crucial for investors to thoroughly review the fund's prospectus and documentation to ensure it aligns with their values and investment objectives. By understanding the underlying principles and strategies of sustainable and ethical funds, investors can make informed decisions that not only generate financial returns but also contribute to a more sustainable and responsible future. Benefits of investing in sustainable and ethical funds. Investing in sustainable and ethical funds offers a host of benefits that go beyond financial returns. As individuals become more conscious of the impact their investments can have on the world, these funds have gained significant popularity. Let's take a closer look at some of the key benefits associated with investing in sustainable and ethical funds. Positive impact on the environment and society. By investing in companies that prioritize sustainability, renewable energy, social justice, and responsible business practices, you can actively contribute to positive change. These funds focus on supporting companies that are committed to reducing their carbon footprint, promoting clean energy solutions, and embracing fair labor practices. As an investor, you can align your financial goals with your personal values, making a meaningful difference in the world. Long-term growth potential. Many sustainable and ethical funds have demonstrated competitive financial performance over the long term. Companies that prioritize sustainable practices are often better equipped to navigate environmental and social challenges, which can result in more resilient business models. Additionally, these funds can capitalize on emerging trends and technologies in areas such as renewable energy, green infrastructure, and sustainable agriculture, which are expected to experience significant growth in the coming years. Risk mitigation. Investing in sustainable and ethical funds can help mitigate certain risks associated with traditional investment approaches. Companies that prioritize sustainability tend to have better risk management practices, as they are more attuned to potential environmental, social, and governance (ESG) risks. By incorporating ESG factors into their investment decisions, these funds aim to identify and avoid companies with significant sustainability risks, ultimately reducing the overall risk profile of the portfolio. Enhanced reputation and brand value. For companies, aligning with sustainable and ethical practices is no longer just a moral obligation but also a business imperative. Investors are increasingly considering a company's ESG performance when making investment decisions. By investing in sustainable and ethical funds, you are supporting companies that have strong ESG credentials, which can enhance their reputation and long-term brand value. This, in turn, can lead to increased shareholder value and potentially attract more investors. Investing in sustainable and ethical funds allows you to make a positive impact while potentially achieving competitive financial returns. It's a win-win situation that aligns your profits with your principles, enabling you to contribute to a more sustainable and equitable future. How to identify sustainable and ethical funds? When it comes to investing in sustainable and ethical funds, it's crucial to have a clear understanding of how to identify them. With the increasing demand for socially responsible investments, there has been a surge in the number of funds claiming to be sustainable and ethical. However, not all funds live up to their claims, making it essential for investors to do their due diligence. One of the first steps in identifying sustainable and ethical funds is researching and understanding the fund's investment strategy and objectives. Look for funds that explicitly state their commitment to environmental, social, and governance (ESG) factors. These funds typically incorporate sustainability and ethical considerations into their investment decisions, ensuring that they align with specific principles. Assessing the fund's ESG integration process is crucial. Look for funds that have a robust methodology in place to evaluate companies based on their environmental impact, social responsibility, and corporate governance practices. This may involve analyzing factors such as carbon emissions, labor practices, board diversity, and community engagement. A transparent and comprehensive ESG integration process indicates a higher likelihood of investing in sustainable and ethical companies. Another important aspect to consider is the fund's track record. Look for funds that have a proven history of investing in sustainable and ethical companies and have consistently delivered competitive returns. While past performance is not indicative of future results, it can provide insights into the fund manager's ability to identify and invest in companies that align with sustainable and ethical principles. The fund's engagement and voting practices. Sustainable and ethical funds often actively engage with companies to promote positive change and advocate for sustainable business practices. Look for funds that disclose their engagement activities and voting records, as this demonstrates a commitment to driving positive impact beyond just financial returns. Consider seeking guidance from financial advisors or experts specializing in sustainable and ethical investing. They can provide valuable insights and help navigate the complexities of the investment landscape, ensuring that you make informed decisions aligned with your values. We hope you found our video on investing in sustainable and ethical funds informative and inspiring. In a world where conscious consumerism is on the rise, aligning your profits with your principles is more important than ever. By investing in sustainable and ethical funds, you not only have the opportunity to grow your wealth but also make a positive impact on the environment and society. We encourage you to explore the various options available and take the step towards investing in a better future. Together, we can make a difference and create a more sustainable and equitable world. Don't forget to like, subscribe and comment on this video for more interesting video ahead.